Hello viewers, in this video I'll be going over natural gas, ETF ticker symbol UNG. We have about 1 hour left in the market and natural gas is down 2.4%, and on the 1 hour chart we are currently oversold on the 1 hour RSI. Same as the 4 hour chart, we are oversold. On the daily chart we are not yet oversold yet. This is the weekly, but on the daily, we have not reached to oversold levels, which concerns me because we are at a support level that dates back to February 7th. And I was counting on whenever we reach this support, we would be at oversold level, but I have a feeling we may go down a little bit further. But for resistance, if we were to, or the shorts to cover, we would see a resistance at around the same price level as the 18-day moving average, as you can see here. And this 18-day moving average coincides with the floor that we've seen in the past week, and that price is around $23.80. So right now what we need to see is if we close below the support, that may indicate we may head lower and breach on the RSI to be oversold. But if we were to recover and bounce, that movement will be about 3.6 up. And onto the next module, I'll compare today's trend with the trend that dates back to May 12th to July 23rd, 2018. I'll point out why these two charts are similar. So what we have here is we started the trend below the middle Bollinger Band. So we have this price action here. Let's extend it. And then we ended up having a trend that's remained above the middle Bollinger Band for several days. And we'll make this green. And let's try to make this red. And then afterward, it lost strength and continues to go down further. Every day we made lower lows, signaling a downtrend. And same what we had here. What we found here, not much of a trend, but we do start on the bottom Bollinger Band, and we do have several days of the trend remaining above the middle Bollinger Band, and it finally broke through the middle Bollinger Band, and we have this downtrend that we currently have today. So you could see a slight pattern, and there's reason to believe that these two patterns may hold some information to where natural gas may head to in the next coming days. What we have here is we're grinding along the bottom Bollinger Band, same as in this case. So back then, let's check the forecast model for natural gas in May 12th, 2018 to July 23rd, 2018. We are currently at day 0, 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So natural gas will be around 3.2% up, fairly close to where I marked on the technical chart, the 18-day moving average. If we were to make a recovery and find the floor, and we may find hope for the bulls if there is a large withdrawal on the Thursday weekly EIA inventory report. That is something to look forward to. And as we compare the charts between the current chart and the May 12, 2018 to July 23rd, 2018, you can see the lines, they aligned up and they have similar motion. And that is all. If you enjoyed this content, feel free to like, subscribe, and thank you for watching.